Okay, so we've decided how we're going to frame the trade if we're going with the strength of the move. We're looking for a further continuation. Great from a day trader's perspective, great from a swing trader's perspective as well. Now, that's all very well if you're trading the actual instrument that's gapping lower. So the Dow, the DAX, the FTSE, the CAC, whatever it may be, and that you're trading the broad instrument and you're trading that directly via a CFD or however you choose to trade that, the cash CFD, whatever. But there's a kind of extra way you can trade it, and this is again suitable for both day traders and swing traders. I'm looking at it from a pure day trading perspective, but you definitely can extrapolate this out if you're interested in swing trading, holding these positions a bit longer. And let's talk about that now. So let's say the market has gapped lower. Let's look at the behavior between strong stocks and weak stock to that broad gap. Now, I don't want to get confused between individual stocks gapping lower based on their own news flow, so earnings coming out, court hearing, or whatever it may be, some sort of report or anything specific to the stock. I'm talking about a broad gap lower on the market and how individual stocks react. And obviously, it's not lost on me the fact that the indices are made up of each individual stocks, but let's just have a look and see what's going on. So in this scenario, let's go back to the spiders so we can see again the gap. Let's flick it to a daily so we can see, visualize what's going on. Bit of a gap lower. Now let's look at two distinct different stocks. I want to look at US Steel. Now US Steel, let's remove that if we can, is a weak stock. This thing, forget about the reasons, it doesn't matter. This thing has gone from a $40 high to $20, halved in a few months. Savage earnings that's gapped it lower, hasn't recovered from that. It's just been ground lower and lower and lower. I think you will agree, regardless of whether you happen to be holding this stock or not, that that chart is predominantly weak in the medium term. We can scroll out and it's a little bit of a mixed picture, but if we're looking, kind of at this year, it's not looking good for a company if it's halved in value. Flick that over to Amazon. And let's look at the difference here. Let me just remove that so we can see. This is a darling of Wall Street. It's doing very, very well. Again, regardless of what your opinion is of the stock, the chart is in an uptrend. You couldn't really argue that that's not a strong chart. Very bullish. Gaps are bought, chugging up. We had some hiccups along the way, as we always do. But we're not far off highs. It can't do any wrong. Earnings are holding things. All good. So let's look at how these two different scenarios or the two stocks respond to a weak gap lower. And this is going to be interesting because what I'm getting to here is that you can trade a stock as a proxy for the bigger picture gap lower on the index. Let's have a look at X. Let's go back to X and let's go to a 1 minute chart and let's see exactly what's happened. Look at this gap lower, pull back up, 1, 2, 3, 5 minutes, and literally 5 minutes was all it could do before it just got absolutely slammed. Didn't really, paused a little bit here, but by the time that was over and done with, it was just a one-way street. A little bit of a counter trend move, but ultimately right down at lows. This thing's down like 4% now. It's a significant move. Brutalized move. No one's really stepping up to the plate. I would say this is more noise, this move. This is kind of a little bit of a showing by the bulls, and if you're trading this, you'd probably put some levels in here, but that's not what we're talking about at the moment. Now contrast that with trading Amazon, or look at the Amazon gap. Amazon, again, bullish chart on the daily, but look at the difference. This is a complete different chart, considering it's it's a broad market gap lower. We've pushed higher, and we're actually above the daily low, just about here. Every time we push in the low, we found a few buyers here. This thing's down about 1.5%. Distinctly different chart to the US Steel chart. So what does that mean for us as traders? What's the point of me telling you all this? The point is, if you've decided that you think the gap lower is going to continue, and I'm using gap lower as an example here, but you could use a gap higher, then what you want to do is you want to be looking for, and if you want to use this sort of second tier trading strategy, is you want to look for a weak stock for the continuation of the gap lower. You don't really want to be trading Amazon short because Amazon is a strong stock and you can see the evidence of how strong, relatively speaking, the chart is. So if you're shorting Amazon, yes, there's a little bit of meat in there, but you're going to have to wait until the market is a lot lower to get your final target of it pushing through the daily low. Compare that with US Steel and how much weaker that is, and there's a significant more meat in the trade. So my point is, if you identified the gap lower, you want to take a continuation, but you don't want to trade the index direct, you don't want to trade the Dow Cash, whatever it may be. Look for your this is where your homework comes in, guys, as well. For if you're day trading, if you're swing trading, or if you're looking to invest in a stock even via the CFD for a sort of medium term, then even this is where it comes in. You can identify when there's an opportunity. So you've already identified weak stocks. You say, okay, listen, I know that this is my little basket of weak stocks here, my little basket of strong stocks here. So if I get a gap scenario, if I'm looking to go long, whatever that may be, I'm going to move to my strong stocks. If I'm looking to go short, whatever pattern that may be on the index, I'm going to move to my weak stocks. And you can see just by eyeballing this chart, these two charts here, how significant different the intraday action is, allowing you to become more aligned with the bigger picture while still using the short-term power of that gap to help you out. And if we look at something else like Facebook or something, which again has been a reasonably strong stock, this is gapping lower, but look at the difference in the size that we're gapping lower. If we go and scroll down and see the price, we're down like 1.8%. Compare that to US Steel, which is down 4%. It's significant different. So understanding that, recognizing that, and using it perhaps as a way of getting involved in the gaps. Now let's go now and talk about how we would trade a gap fill.